Welcome back if you've been here before to the August 2022 version of the Las Vegas Real Estate Market Report. My name is Jan O'Brien, along with my co-team leader, Cosmo Morabbi. This is our amazing team of local area experts here to serve all your real estate needs all around the Las Vegas Valley. Here's what we're going to cover today. As always, we dive deep into what is going on in our local market, the housing stats, the trends with some analysis and opinion about what it all means to you if you're a seller or a buyer or looking to become a seller or buyer. We're here to help you with that. Also going to compare the stats for the whole valley to 4 different areas around the valley, just to give you a sense and some perspective. And speaking of perspective, I want to give some historical perspective this month and take a look at where we've come with pricing and affordability here in the Las Vegas Valley, and then look forward to what's projected and what we feel is going to happen here in the market. Nobody has a crystal ball, but we certainly try to stay on top of that and bring that to you each month. All right, what's the big news? 2 months in a row now. First time in since 2020 or so that we've actually gone down in price. Okay, so all right, so it was only $2,000 in May. We hit a high point so far for the year. The highest median sales price historically for Vegas was $482 back in May. It dropped down to $480 in June, but we dropped $15,000 for median sales price, $465. Now that is still up 14.8% year over year, but take a look. We're not in these numbers anymore. We're not in the crazy 25 to 26% year over year appreciation. More on that in just a minute with the perspective. Now, what else do we want to talk about? Availability. This is the story, right? Where were we with all this crazy price increases in the last year or 2 years? The appreciation that just seems like it was getting out of control. It's real simple, supply and demand, right? Economics, folks. Very low inventory, even lower than 1821 in the previous year, and a huge high demand of buyers coupled with very historical low interest rates in the threes. That was a perfect storm for the market that we were in. Well, that market has definitely shifted. It shifted quite a few months ago, as can be seen here in this price point right here. Plus, it can also be seen in the number of solds. So we had, this is closed sales, single family. In January was 2561. It crept up into the 32s, right around 3,000. It was 2668 in June. It was 2,066 in July. That is also here with the story is right here in the availability. This is the available inventory at the end of the reporting month. So January 31st, there were 1,821 single-family homes available for sale. Fast forward to July 31st, it was 7,331 homes that were available. Quite a jump of availability because, again, of the lower demand, higher interest rates is causing all this. We've gone from 0.7 months of inventory to 3.5. That means if nothing changes, it would take, with all these variables, it would take 3.5 months to get all those homes sold. All right, let's look at some other numbers. Always like to take a look at perspective, right? You know, you got to look at where we've come, not just where we're at. If you're not comparing it to something, it's kind of hard to say, well, what does it mean? What do any numbers mean unless you can put some perspective on it? So I've been doing in the last several months this availability, and we're back to 2015, and you can see back when we were in more of a buyer's market, and then we got back down into a bit of a seller's market in 2017, 2018. And then here is this, everything's always in cycles, right, in real estate. And now up here around 8,000 is what the inventory was when we were back more into a buyer's market, or buyers were in control. And then we have the pandemic, right? Here we are, and then the pandemic hits and we go down into this trough of not enough homes for sale and a lot of demand and high and low interest rates dipping. And then we start the new year. We're still in this position in the new year. This is where we saw all this appreciation, which I'll show you in just a moment. But here we go, 2 months in a row, and we're going to see where this trend continues for the rest of the year to see if we end up with another one of these peaks and valleys, right? All right, what other stats? We always like to look at cash. Of all the sales last month in July, 32.1% of them were cash. This actually went down from 0.5 to 0.2 for short sales and foreclosures. We'll keep tracking. That's going to take quite a bit, for things to happen. prices to come down, not people not have as much equity, and to really get behind in their payments. Other things could lead to that for this to come up and to be of any significance in our market. All right, let's take a trip around the valley. 465 is the median for July. What was it over in Summerlin? Well, 635. It's always higher in Summerlin. This really came down quite a bit month over month because there were a couple of really high sales in the Summerlin area. And I am just reporting for this statistic, by the way, not everything that's technically Summerlin. I've excluded Red Rock. Even the Sun Cities, I'm just looking at Summerlin Hills, Summerlin West, North, South, and the 5 areas that are Summerlin in the multiple listing service. So 635,000, that's only up 5.7% year over year. Again, that had been more like 28% year over year. It's down to 5.7% year over year. 101 units sold and 273 new listings. We'll come over here to Inspirata, newer master plan community for July. The median sales price was $592. That's just up 16% year over year. Over to Silverado, and we report, let me get this back on track here. We report all of this area here for Silverado, not just Silverado Ranch specifically. So we're just kind of looking at all of this older area, more established area of town. This is generally right at or below the median sales price. So you can see it's $449.5. There were just 77 units sold in July. It's usually higher than that. And then out in Pahrump, this definitely jumped down from the high threes in June down to 311 as a median sales price with 51 single family units sold. All right, weekly sales activity. Now, we do this report every month, and it's here on our channel to take a look at things from a month's perspective. But if you're really into the statistics and you want to know what's happening on a week-to-week basis, I invite you to follow us over on TikTok. We are at Living Las Vegas, and Cosmo takes these weekly stats and really crunches the numbers down and gives his opinion and perspective and analysis of what's happening. So this is what we look at every week, and we compare it to the previous years and where we started out. And again, you can see on a weekly basis, this is just the previous week, starting in January 5th, 2172 active properties were available, or listings were available in the previous week, up to 7,461 for the first week or so of August. And we can also see a couple things here. Under contracts, that's who's writing a contract. Well, they've really dipped below 500 for the past 4 or 5, 6 weeks, which is very significant. The demand is down. The solds, therefore, are down. They are a lagging indicator. They come after the sales. The under contracts that happen here are going to start showing up here for what actually sold. There are people canceling contracts. There's new homes that are being canceled, and that number is down as well. And then we can also track this price, and we can see that back in June, we kind of had a peak of $499, and it's basically adjusted downward since then. And then something also that's very interesting is price reduction. So this, again, tells a story. Back when homes were flying off the market just beginning of the year, and obviously last year, there were barely any price reductions. Well, look at the last 5 weeks, over 1,000. The last 4 weeks, over 1,000 price reductions on a weekly basis. Sellers will have to move the prices down to get the home sold because there's not as much demand. All right, so that is the weekly report. Now I want to get into a little perspective. So we're seeing all these headlines, and we're seeing people report, and maybe YouTubers and everything, like the sky's falling, the housing market's crashing. I'm going to wait till the prices in Vegas get down to 200,000. I don't think that's going to happen anytime soon, but we are certainly going to look at the perspective of it all, right? So if we just take a snapshot of where we have come in a graph format since the beginning of January, or actually this is the January 31st number was 435. We went to 450. There's 15,000. Here was another 10,000, another 15,000. Then we only jumped up here to 482, which is our high so far, and then dropped down 2,000 in June, and now we're down 15,000. So what do we think is going to happen? We think maybe August is going to show another decrease, and are we going to flatten out? Is it going to go down any further? That just really depends on what is happening in our economy with inflation. Are we really in a recession or not? What's happening with the interest rates? It's all about the buyer demand, right? If more buyers jump into the market, I think there's people sitting on the sidelines. If you're listening to this, you might be one of them. Investors, buyers going, I'm going to wait till the prices come down further, then I might buy, or I'm going to wait and see what happens with interest rates. And, buying a home and selling a home is a personal decision. And we definitely, encourage you to reach out to us and let's have a conversation about that so we can talk about the pros and cons and help you decide what it is. Nobody can specifically time the market perfectly, because if we did, we'd all be rich, right? Same with the stock market. But when you are past a market dip or a high after you're past it. You sometimes you won't know that until we are past it, where we're going to be. So we're all making educated guesses at this point. Now I want to go back a year and talk about, we ended the year of 2021 at 425, and it went up another 10,000 to 435, right? So now we're hovering over here at 465. But let's go back the year before, because again, I want to give perspective. If you're a homeowner and you're thinking about selling your home, it depends on when you purchased the home, right? But let's look at the whole year of 2021. Started January 31st. As we report, the median sales price was 345, and we had these jumps of anywhere from $5,000 to $10,000 a month, right? Until we hit, here at 10,000. It was generally about 10,000 until we hit July, and then it evened out. It went up slightly in September, and then it went up a little bit more in October. Then we had another 10,000, and then another 5,000 gain to get to where we are so far this year. Okay, so let me go ahead and I put this all together in one additional annualized graph. So here are the median sales prices in the Las Vegas Valley as reported by the multiple listing service for the end. So these are December 31st numbers for 2012, 149,000, right? And this is the perspective. We're talking to folks right now and sellers saying, well, I missed the peak. I missed at 482, or you're upset because you didn't sell then. Well, there are reasons why you didn't sell then. And if you're trying to time the market, that's what I just talked about. The reality is to put it into perspective, in my opinion, to say, when did you buy your house? Okay. The affordability for Vegas has been here. I've been here for 30 years. We hit obviously the prices were even lower from 2012. I've been here since 1992. So we've had this appreciation. I put it over here. From 2012 to 2013, we were coming out of another really powerful seller's market, right? And there was a 19% year over year gain, but then it's somewhere between 5 and 9, with the exception right here in 2017, where we went from 235 to 267. So we have this kind of steady gain, a little jump here, and then another steady gain, 9%, 5%, 9%. And then boom, in 2021, we're at 18.8%. We went from 345 to 425, December to December. And now, as I just showed you, we've gone from 425 up to 482, down to 465. But when you put it into perspective, I think it can help you. So let me give you an example. Let's say you are a homeowner and you have a median sales price home and you bought it in 2015 for $217,000. Fast forward, you sell it now. Let's say you get 465. Okay, or even if you get a little less than that, but I'm going to use this example, 217 to 465, that is a 53% equity gain in that time period, about $248,000 in equity if you haven't taken money out, done a cash out refi, don't have any other liens and stuff against the property. Maybe you've improved the property. I'm just doing a straight line. You bought it for 217, you sell it for 465, that's 248,000 in equity gain. 53%, and then you can do the math to take a look at it. So it is about perspective. We don't know exactly what's going to happen with the market, but are we going to end? Well, let me go forward and tell you what we think. All right. So here are the national housing forecast with all the experts: Fannie, Freddie, National Association, Zelman and Associates are big, huge economists, CoreLogic, the mortgage bankers who are the most pessimistic on appreciation at 2.7%. And then we got Fannie up here at 16. So an average of all those experts forecasts at 10.3%. Now, I have been feeling since the beginning of the year, I'm thinking, wow, we're going to blow past that. Now, obviously, we've had this adjustment. We knew we were going to have something. I think we're going to ultimately be lower than the national average because we had this really crazy spike, maybe bigger than some cities. We are like a couple other areas where a lot of people were moving to, like places in Texas and Florida. Even Idaho and here in Nevada, we saw all this, people moving here, right, during the pandemic, or, just with all the things that happened with remote jobs and various reasons people were migrating. Now, for us to get to zero equity gain year over year in 2022, we'd have to end the year where we ended in December, which would be 425. So we'd have to come down from 465 to 425. Is that possible? I don't know. Maybe. I personally feel it's going to be more in this 5 to 8% that we end the year, maybe right in here around 446. So that'll give us a 5% year over year equity. We'd have to end the year at 467, kind of where we are now, to have about a 10%, which is what I just showed you right here, right? We're at 8.69 months out of the year. 7 months into the year. All right. So if you follow along with us here, either here on the YouTube channel or over on TikTok, we'll keep you up to date with our analysis on and staying on top of what is happening locally. So let me end up here with mortgage rates. They fluctuate, right? So the bottom line on mortgage rates, if you're trying to predict it, is so hard. We literally had a client that was thought that they had was able to buy more property just recently in this last month because their interest rate went from 5.675 to 5.125 while we're in the middle of the transaction. Okay. And this is perfect. This it fluctuates daily. These are literally weekly fluctuations from January 1.6 to 3.22. You can see where it's all fluctuated here. Here we can really see where it spiked up. And this is what I was saying in June is where everything started changing with pricing, and the mortgage rates spurred this. And they reacted not to the federal funds rate. They reacted to the numbers, the economy, inflation, what was going on in the bond market, and the 10-year treasury is where the mortgage bankers, the industry makes its adjustments looking forward, not in the short term. The Fed fund rate adjustment hikes are to get inflation under control, right? And they really impact the short-term interest rates like car loans and credit cards. So here we are, and now we've had this fluctuation even in the last several weeks where as I look at it today, it's right at about, as a matter of fact, I'll look at it right today. As I am recording this live, I am checking the Mortgage News Daily. It's 5.18% as I record this on August 11th. All right, so interest rates, they hopefully are going to stay, I don't know. Right now they're staying under 6. And let's see what happens it's all about recession, what's happening with inflation. If we really go into an extended recession, we come out of that recession, expect interest rates to come down. The interest rates may rise up based on what is happening in the economy and the labor market and all those things that we have to take a look at and see where it's at. But trying to predict exactly where the interest rates are going to get lower. Are we going to see below 3%? I don't know. I don't think so. We had that because we had the crazy unique situation of this pandemic, right? And to what the Fed had to do to get the economy continue on. All right. So that's it for August. We are your local area experts. Please reach out to anyone on the team if you have any questions whatsoever. We're here for you. We'll happy to do a consultation, sit down and talk to you about your goals in real estate. And until next time, we'll see you right back here on the channel for what happened with August numbers.